not only are we at a higher multiple because I think earnings are going to be closer to 250 than 270 this year, but also we're at peak margins. But I think the debate around that is, okay, are we at peak margins because we're spending 7% of GDP in deficits, or are we at peak margins because we are in a whole different world in terms of productivity, and the productivity lift is real and it's AI driven and it promises to continue?
I believe the latter. And remember, I'm not super bullish. I'm just
Yeah,
optimistic. I'm
yeah,
optimistic. I just think the pullback in the markets, because remember, let me tell you another data point. In the last 45 years, the stock market has been positive in 37 of the last 45 years. Our average intra-year loss is negative 14.2 during those time periods. Volatility is a normal part of investing, and this is pretty normal. This
yeah.
volatility, I just think this tariff overhang is such a binary decision. So if you look at long-term fundamentals and technicals, it's hard to kind of navigate through that. But with that said, though, I do think productivity is going to be the big earnings driver. Yes, profit margins probably weaken a bit because, especially with import costs coming and the inability to pass on cost to consumers, but productivity is surging. It's not just AI, it's other ways that it's surging. And every time historically when productivity surges, we have exited out of a recession. So I'm still optimistic that we're able to narrowly but still avoid a recession this year.